John, it's great to have you. And which are the names that you think could benefit from this inflationary environment?
Well, thanks for having me. Look, I think there's no shortage of inflation across the industry and across most industries, frankly. The building product companies in our coverage, as the home builders do as well, have a fair amount of pricing power. And that's because demand is very strong at this point, and there's limited supply of houses. So I think that, maybe starting with Masco, which is a buy-rated stock of ours, $87 price objective. This is a company that sells kind of lower ticket repair and remodel products, so sort of shielded from the new construction side. They caught up to inflation in the fourth quarter. They're going to have the first quarter is going to be better than the fourth quarter. And I think they'll be actually pricing will be accretive to margin as we move into the third quarter.
Yeah, and Masco shares are trading around 58. You think they could be at 87. Just if you would respond to what we've heard from other analysts who are cautious about having exposure to anything in the housing sector right now, because it seems like it is kind of at a cyclical low, weak point, if you will.
Yeah, we would disagree, frankly. I mean, I think that the levels of construction that we're at right now and the levels of repair and remodel activity are so strong. We could frankly use some slowing because the industry just can't keep up and there's excess cost that goes along with that. We've seen periods like this before. In fact, we've seen this movie at least 4 times over the past, call it, decade. 2013 with the taper tantrum, saw it in 2015 when rates first went up following the global financial crisis, 2018 with the recession scare, and 2020 with COVID. The stocks all got cracked and then shot up markedly once the kind of cooler heads prevailed, if you will.
Let's turn to another stock you like, despite it being down 37% over the past year and having been hit hard by rising input costs, and that is Azek, which is a composite decking and railing company. The cost of the inputs, the PVCs, I guess petroleum products that go into them, up substantially.
Yeah, it's a great point. Azek is one of our favorite names out there. Composite decking. Look, there's no shortage of desire for folks to be outside given COVID. I don't think that changes. There's been a lot of work that we've done around just a changing mindset around spending time at home. Azek, polyethylene and PVC are the main inputs. Surprisingly, and fortunately, they have seen some kind of leveling off. I think that's very encouraging. And maybe more importantly, demand is so strong out there that pricing power, again, is sort of meeting costs on a dollar-for-dollar basis, still dilutive to margin at this point. But as we move into the second quarter, we think that they're going to be, again, accretive to price will be accretive to margin.
So are there any other names, John, that you think might not be as well positioned in your coverage space?
It's a very good question, but I tell you, look, where we sit today, there's just so much demand out there. And look, that could change. I mean, interest rates going up, there is certainly fear around that. But again, I think we could use a little bit of slowing. The names in our coverage universe, frankly, have all demonstrated remarkable pricing power. And it's just a shortage of supply and a lot of demand. So it's a great environment to be in the home building industry.
It's not often we hear people say, maybe our industry could use a little bit of a slowdown. So I think that speaks volumes as to what's going on. John, thanks for your time today.